Hello, this is Zainab Marjan, and today we are going to do a pre-scene information analysis for ACCA's March 2024 Strategic Business Leader exam. So we'll start with a little introduction, and then I will have separate videos for SWOT analysis, Porter's 5 forces analysis, and a review of KPIs. First things first, we have a football club, and the company that owns the football club only operates the football club, and we will refer to both of them as Athletic Trust Central or AT for the purposes of this pre-scene. I like how this one was built. So if you are not a football fan, you have everything you need to know in the pre-scene. You don't need to worry about not knowing anything about football. It's all here. Nothing to worry about. It tells us right away that the performance is declining. So we start by knowing that there are issues with the performance and we might be asked about how to improve this performance. We might be asked about the reasons of performance decline depending on the exhibits we are going to be given, of course. And another thing that I have seen repeatedly in the exam is that I have seen many things that made me think of talent management. Obviously, football players are a key talent, are a key resource in this case for success. We learn about the league and we get to learn about other levels of competition such as the domestic cup and international competition. We also learn that to take place in international competition, you need to be one of the top 3 teams in Division 1 in Thailand. This is important because we will learn soon that AT has not participated in the international competition for 8 years. So they have not been in top 3 in the last 8 years. We also learn about the other teams and the regulator. There are financial fair play rules which are quite stringent and we are given more information about them in the following pages. Then we are given information about income and expenditure of clubs and more detail about financial fair play regulations. This seems like it's going to be very important in the exam, so we need to understand both the regulations and the example. So what it tells us is that this is relevant earnings, which is equal to relevant income minus relevant expenses. It makes it very clear that this is not accounting profit, this is something different. And looking at these, it seems that this is more related to cash flow than accounting profit because, for example, here under expenses, we have something that we wouldn't automatically think of as an expense, dividends. So this made me think of cash flow. We also see that this has consequences. This has penalty. You can lose your place in your division. You can be relegated. So there are definitely risks here. This has serious consequences if you do not follow financial fair play regulations. Then we have industry challenges, which immediately made me think of Porter's 5 forces. And looking at the rest of the pre-scene information, you can do a little Porter's 5 forces analysis from this information. We are also given risk and threats here, which makes me think that maybe on top of the SWOT that you usually do, you should also do a TOS analysis. You are maybe expected to be more proactive here. So when we look at the risks, we see that majority of the risks is actually about the declining performance. For example, we start with loss of income through poor performance and competition. For example, problems with commercial sponsors. They may not be so directly related to the performance, but for example, the sponsorships, how many of them will be available to you is of course linked to your performance. The better you are, easier it's to find a sponsor. There are reputation risks, there are other financial risks. Again, there are things that make me think of talent management here. So you are given a good list of risk and threats. And then we are given stakeholders. So obviously you think of Mandela here. And there's an example of Mendelov analysis of a football club on Study Hub. You can check it out. It's in chapter 4. But I do not think that the same analysis applies here. It can give you an idea, but for example, in that analysis, it says that players have low power. In this case, I do not think that good football players have low power. They seem powerful to me. Again, declining performance. Another thing that we are repeatedly signaled in the case or showed or that's mentioned in the case is that building a new stadium can be an opportunity. That is repeatedly mentioned in one way or another. I will be doing a separate video on KPIs, but as you see, I noted the ones that I could, see from the case whether it was declining or increasing and whether they are good for the team or bad for the team. This is a family company, it is not listed, and this being an SBL exam, you know that one of the questions can be about the possibility of this company being listed. We have the board structure here. One thing to remember here is that the directors at the board level show us which functions are a top priority for this company. So for example, one interesting thing here is why does the marketing and IT have the same director? And why doesn't it mention risk management at all while having only one board committee and that being audit committee? No risk manager, nothing about an ERM, no. Once again, we are reminded that the stadium is old and we should consider a new stadium. Combining this with the fact that they do not have a lead sponsor, finding a lead sponsor, giving the naming rights of the new stadium, and getting some of the funds necessary for this construction project from the new sponsor seems like a good option, but of course everything will depend on the exhibits. Also, it mentions here that they have some data, they have a website, they have an app, they have social media accounts. So one thing to note is that it mentions that the director believes that the maintenance of data is in accordance with the legislation, but no mention of controls here. Training facilities are much newer than a stadium, and they are at least one of the best in Thailand, so this is a strength. And below we are told about commercial activities. There might be some outsourcing opportunities, or they can sell more merchandise online, which is a possibility, combined with the fact that they have customer data and data of the fans that have season tickets. This could be a data analytics question where you can use data for online marketing. We have website extracts. We can see that mission is not really happening at the moment because they are not one of the leading clubs in Thailand. At least they are not in top 3. They are the 8th in the last season, so not going very well. If they are holding these values, they look like a socially responsible company, but we do not know if the actions match the words. Then we have financial information. We don't have a cost breakdown, so we do not know why, while the revenue is clearly increasing, EBITDA is going down, as well as FFPR. Another alarming thing here is that revenue by type, when I look at it, I see that television income is the highest, but the league negotiates that income for all football clubs. So you do not have control over your main source of income according to this data. And yeah, so we do not know what cost, except for the maintenance cost, drives this decreasing EBITDA.